Late S Corp election. What happens if you miss the deadline? Don't panic. There are options available for businesses that have missed the window to elect S Corp status. This video will guide you through the process of filing a late S Corp election, its requirements, and potential relief options. First, let's quickly define what an S corporation is. An S Corp is a special type of corporation that offers unique tax benefits. It's considered a pass-through entity, meaning that income deductions, credits, and losses are passed on to the owners instead of being taxed at the corporate level. This can result in significant tax savings for small businesses. Normally, to elect S Corp status, a business must file Form 25553 within 2 months and 15 days of the beginning of its fiscal year, or within 2 months and 15 days of incorporation for new businesses. But what if you've missed this deadline? The good news is that the IRS allows for late S Corp elections under certain circumstances. To file a late S Corp election, you'll need to submit Form 2553 within 3 years and 75 days of the intended election date. This form can be attached to your current year Form 1120S or submitted directly to the IRS Service Center. When filing a late S Corp election, it's crucial to avoid common mistakes. Ensure that Form 2553 is completed accurately and in full. All shareholders must sign the form. If you're attaching it to Form 1120S, make sure it's properly included. Most importantly, you must provide a reasonable cause for the late filing. Speaking of reasonable causes, the IRS tends to be fairly lenient when granting relief. Common acceptable reasons include lack of awareness about the filing requirement or oversight by a company officer or accountant. Clearly explaining your situation can significantly improve your chances of approval. Now, let's discuss why S Corp status is so appealing for small businesses. The primary benefit is pass-through taxation, which can lead to substantial tax savings. S Corp also offer limited liability protection for owners and easier transfer of ownership compared to other business structures. These advantages make it worthwhile to pursue S Corp status, even if you've missed the initial deadline. To increase your chances of IRS approval for a late S Corp election, follow these tips. First, provide a valid and detailed explanation for the late filing. Ensure your business meets all S Corp eligibility requirements. Complete Form 2553 accurately, including all required signatures. At the top of the form, write filed pursuant to Reven Proci 2013-30. This indicates you're requesting relief under the IRS's simplified late election relief procedures. Remember, until you receive approval from the IRS, your corporation won't be eligible to file an S Corp tax return. The processing time can vary, but it typically takes 6 to 12 weeks. Don't hesitate to follow up with the IRS if you haven't received a response after this period. In conclusion, while it's always best to file your S Corp election on time, missing the deadline isn't the end of the world. By following the proper procedures, providing a reasonable cause, and avoiding common mistakes, you can still take advantage of the benefits of S Corp status. If you're unsure about the process or need assistance, consider consulting with a qualified tax professional or attorney to guide you through the late S Corp election process.